What is a credit score? In this video, I'm going to take a little bit of time to go over what a credit score is and really what to look out for when thinking about credit or your score. So, as defined here, a credit score is a numerical representation of your statistical likelihood to repay the credit that is extended to you. So basically, all a lender wants to know is, are you going to pay back the loan that they give you? So here's a range of credit scores that you could have. Obviously, the higher you are, the better, because you'll get the better loan terms and the better rate. But I would even want to say that all the green sections should be anything above 700. As it's a good target area to aim for there for anyone below that. And anything above 700 will probably end up leaning towards a conventional loan program. But again, that'll depend on the situation at hand. So that's not to discourage anyone in the 600 range or below. I don't want to add a negative denotation at that, because you can still qualify for loans there. And even I would probably recommend at that point, FHA is usually where it leans to at that credit score. But again, we can take a look at what we can do for you there. Just an idea to give you a range. So what a lot of people don't know also is that they have 3 different scores, and lenders will look at all 3 scores when qualifying for a loan, but we're only going to use the middle score, really. So it's important to monitor those 3 because, well, one, they come from the 3 different credit bureaus: Equifax, TransUnion, and Experian. But you want to make sure all 3 are high so we can, use a middle score and they're all high as well. So just keep that in mind. Here is a credit score breakdown. This is going to show you different categories and the weight that they have on your score. And each credit bureau calculates your score differently, but it's going to be the same more or less. So first category, payment history, about 35% of the weight. This basically, you just want to make your payments on time and in full. Don't do anything late. Don't miss payments or have any other delinquencies. And just make sure you do this for a long time, because the length of a positive credit history is very important as well. Amount owed, 30%. Don't carry huge balances across all your cards, because that can lower your score. So be careful with that as well. Make sure when you buy something with your credit card or have a credit balance, pay it down as soon as you can. Length of credit history. The longer the history, the better. So if you don't own a credit card or you don't have a credit account open right now, don't go crazy, but I would say look into starting one so you can start building credits, because you'll probably need it later down the line. New credit, 10%. So again, don't go crazy like I mentioned earlier, but they're saying that opening several credit accounts in a short period of time represents greater risk. So if you do need to open an account, like you're getting a car loan or maybe you're getting your first credit card, just make sure you know what you're doing and don't go crazy again. Types of credit and use. You want to maintain a healthy mix. So don't do it all at once, but an ideal credit mix here is demonstrated as 2 installment loans and 3 revolving accounts of balances. So an installment loan would be something like having a mortgage on your home, where your payment's fixed every month and you have a loan balance that's going down. Or a car loan, same thing. Maybe you got a car loan for $20,000 and your payment's $300 a month. I don't know. And that's fixed every month. That's what you pay on. Versus a revolving account would be like a credit card, where your balance changes every month. So maybe this month you spend $500, next month you spend $1,000, month after $200, whatever it is. That balance can move up and down as you pay it down or spend more. That's what a revolving account is. And also, you want to avoid collection accounts, public records, foreclosures, or late payments. And I do want to make sure that we note that Fairway and I myself am not a registered or licensed credit management service provider. All this information is really just for your education and entertainment. So here are some tips for maintaining favorable credit scores. Number 1, first and foremost, monitor your score. You can actually get a free copy of your credit report at annualcreditreport.com. I actually also use Credit Karma to look into stuff like this. Just make sure you know what's going on and read up on it as you can. Number 2, I know this one's pretty simple, but it's very important. Pay all of your bills on time or early. You don't want to be late on anything. Anything even small can have an impact. And number 3, don't co-sign loans. Now, when I say this, obviously sometimes you may need to for one reason or another, but keep in mind that if you do co-sign for someone, say a friend comes to you and needs help, if they mess up on the loan, like they make a late payment or miss a payment or just default on it completely, it's going to have a negative impact on your credit as well if you cosign. So I'd say the cleanest way is just to avoid it in general, but if you have to, be careful. Don't close old revolving accounts no longer in use. So I got a new credit card last year, and that card became my primary card there that I use for everything. But my card before that, which was my first credit card, has the longest length of credit history on it. And if I closed that account, I would lose all that credit history, which is, I don't know, 6 or 7 years, I'm not sure. And then it would default to my new card, which has now only been maybe a year or two now, actually, I'm not sure, which would have a negative impact because my length of credit history got smaller. So what I do is I just use my first card for gas and just pay that off whenever I use it. And then my main card is just used for everything else. Another thing you can do for your accounts that you don't really use anymore is just automate some sort of monthly subscription and a payment on that account every month. That way you don't have to think about it, worry about it, and that's taken care of. Just don't close those accounts because it'll have a negative effect. Don't open new accounts unless absolutely necessary. So this is also just common sense here. Don't go buying cars. Don't go taking out a bunch of loans all at once. Do what, only take what you need, and yeah, play it safe there. Report fraud immediately. Obviously, again, this goes into monitoring your credit, looking at your credit report. If something's funky, dig into it, report it if it's fraud, and you'll be good for that. Here's a big one. Do not extend or open new credit accounts while in the mortgage application process to purchase or refinance a home. So there have been some horror stories of clients where they're, 5 days away, they're in escrow and they're about to close on their home and they're going to get into their first home ever and they get super excited and whatever. They go out and buy furniture, but they finance that furniture. They take out a personal loan to pay for all this new furniture for their home that they're about to have. But their debt to income ratios were already close. And now they don't qualify for that loan that they were going to get to buy the house. And now the lender has to say, hey, we can't give you this loan. And basically escrow falls through because they can't buy the house. So good rule of thumb is just do not mess with your debt or your credit accounts when you're pre-approved or about to get pre-approved or you're in escrow. If you have to do something, then just talk to your lender first, see what they think. And if you, whatever is existing, keep making the same scheduled payments. Don't stop for whatever reason. So there's that. And I do, again, want to highlight that we're not a licensed or registered credit management service provider, but we actually do have our own credit department that can help you boost your credit score up. So what we do is we basically just take a look at your credit, see what's going on, and if you need help getting to a certain goal or just getting it up in general, we provide recommendations on what to do, if there's accounts you got to pay off or collections you want to remove or whatever it may be. We just provide help in that sense. And it's totally free to do this. Again, so just let me know if you want to participate in that. It's a free, easy service to use. So again, just comment below or contact me in any way you can. And if you have any other questions, feel free to comment. As always, like and subscribe. And yeah, good from there. All right. Thanks, guys.